Hello everybody, so welcome to another video, perhaps a long one today, about MicroStrategy. A, simply to let you know that he's buying more. If you're on X, you know that. And then B, I want to address the FUD storm that has been on Twitter for the past, was it 24 hours, 36 hours? An attack on MSTR and a FUD storm, I guess is how I would call it. With the big question is MSTR a scam? Is there trouble going on at MSTR? A Bitcoin offer, I believe, made a few X posts about this, and it got more than 400,000 views. And anyways, we're gonna talk about a little bit of that, and is anything going on under the hood or not. So we're gonna talk about that. But anyways, the first thing is he bought more. That will be announced tomorrow. We don't know how much he bought. I hope it's $1 billion. I hope it's more than $1 billion actually. And yes, he likely used the ATM. He likely used mostly ATM and perhaps a little bit of the strike. And I expect strike, of course, to ramp slowly, week after week. Strife, of course, he can't issue more, and converts, we would have an announcement. And so that's part of that FUD storm today, right? There is no demand for the debt instruments. There is no demand for a debt instrument. Scam. MSTR is a scam. There's no demand for debt instruments. And for the nth time, I literally say this in every single video. I even made a 5-minute video breaking YouTube's cardinal rule of never making math in public. And I made this video, it only got 2,700 views. And you know, the FUD storm gets 400 views. The video with the math, exactly as to how the ATM works, which gives an answer to the FUD storm, gets 2,700 views. So I don't know what to tell you, but clearly most people don't do that math. Once you do that math, once you sit down, do deep work, actually calculate it for yourself, and come back and tell me you're against the ATM. No, you wouldn't be against the ATM. You would be very pro-ATM. I go for a full math in it. Every time he ATMs, he generates yield. It's like selling $1 for $2. For $2. You sell a dollar bill for $2. It's 2x MNAV. After 3 days of every equity selling, for example, and you sell the common equity, you sell MSTR. MSTR is the #1 product of MicroStrategy. You sell that MSTR equity and you sell heavy. You sell $1 billion of it. What do you do to your MNAV? Your MNAV probably drops from a 2x to a 1.97x. Give a few days for the stock to recover, and the MNAV springs back up. And then it is Monday again. And you can print heavy again at a 2x MNAV, and you make the MNAV drop a little bit. And then you wait 2 days, and then it's Monday again, and then you can print $1 for $2 again, and you wait a little bit, and you do that 52 weeks a year. 52 weeks a year. I have no problem, I've said that before in my videos, I have no problem with him reissuing a new 21 billion ATM every single quarter. Because ATM works. ATM is how you generate yield. And you know what? If he does ATM every single week for, say, I'm going to estimate here, the next 18 months, he's probably close to doubling the bag, assuming, of course, the price of Bitcoin doesn't move. But the price of Bitcoin is going to move, and so he's not going to double the bag. Those days are over, because the price of Bitcoin is going to move, because there are relentless buying in the underlying asset. But nonetheless, this is how you generate yield. So, addressing the FUD du jour now, and this is going to be my first point in addressing the FUD du jour, is the offer of a Bitcoin book with half a dozen reviews on Amazon. I think it's a 2023 book. I can't remember. Anyways, the offer of that book is calling MSTR supporters, is trying to say, oh, we're the marketing department because they can't sell the converts. They can't sell Strike. They can't sell Strife. And so you need a marketing department. And so that's rumor number one. And rumor number two is this marketing department getting paid? And I've been on a crusade on this channel to tell you that this is not a debt story. We don't need any of these converts, Strike, Strife. That's long-term thinking from Saylor. That's long-range planning. We don't need any of these yet. As long as the ATM keeps working, and my guess is it's going to keep working for a few more years. As long as the ATM keeps working, it could entirely delete all of this, and the strategy would work just fine Look at the capital structure. Most of the Bitcoin acquired was an ATM. It's all about the ATM. This stock is still all about the ATM. If you think this is a debt story, you're either living 2 years down the line or 3 years down the line, or you just didn't dig deep enough. This is not a debt story yet. It may be in the future, after education and after people actually understanding the preferreds, but we're not there yet. We are not there yet. We were slightly a debt story in the 2021 era, but that debt has been either repaid or dwarfed by the ATM. Look at the capital structure of this company. So this is mostly an ATM story. So that argument, that FUD du jour doesn't, even if it were 100% true, that FUD du jour doesn't even start to make a dent in my conviction, because I know that right now, MSTR is mostly an ATM story, and the ATM is in high demand. The MSTR shares are in high demand. And if you understand the math, Saylor could do the ATM forever. It doesn't bother me. In fact, he could do the ATM, let's say under 1.1x, sure, maybe it bothers me just a tiny bit. I'm like, okay, wait a week. But if it's ATM down to a 1.1x price to NAV, that doesn't bother me. You can do the ATM at a 1.1x and it's still accretive. Accretes way less than at a 2x, but it still accretes. And by the way, there are a lot of reasons why the price to NAV, I think, is going to have a very hard time falling back towards the low ones, or the 1.1 worst case scenario. It's going to have a very hard time. I need to make a video about this. I haven't had the time. But if you go to the Saylor, to the 2-hour and 8-minute call, he spends about 10 minutes telling you all of the reasons as to why the stock is trading at a high price to NAV. Right, from the present value of the future value of a Bitcoin on the balance sheet, to many people still not having access to BTC ETFs, to the imperfect TradFi markets on the rails. The rails are so imperfect, which means that oftentimes it's the only way you can have access to exposure to Bitcoin. There's a lot of reasons. I'm gonna make a full video about this, and I've covered it before on the channel. But anyways, the point number one is we really don't need anybody to buy any of these to have success. ATM is all we need. We just need people to buy MSTR stock. That's all we need. And MSTR common shares are the number one product of MicroStrategy. So that's point number one. Point number two is calling someone part of a marketing department is no diss, right? It's no disrespect. It's not an insult. I'm not saying this was an insult by any means, but it's not an insult. Like marketing, the field of marketing is perhaps the most misunderstood discipline in business, right? The field of marketing has 30 years of bad reputation. Talk to people who actually work in marketing at high level. They will tell you about that bad reputation. It's got that lovey-dovey or cute reputation, which I have no idea where it comes from, but believe me on this, marketing is full of folks who think, oh, I'm going to get into marketing, and then they either change careers really quick or change education really quick, because they find out once they actually start digging deep into marketing, they find out it's not the cute and lovey-dovey science they thought it was. Marketing is a highly rigorous, statistically heavy science, which requires high rigor, which today requires a lot of coding, right? It blends some finance, because you gotta calculate your return on marketing spend. It requires psychology. It requires statistics. It requires data science. Marketing is not the cliche that it needs to be. So first of all, like know what you call someone. Calling somebody a marketing department in my book is actually a compliment. And in fact, the revolutions that we've seen happened in the 20th century. Many of them have been marketing stories as much as they have been technological stories under the hood. You don't think Amazon's success was not a marketing story? Customer centricity? That's the heart of Amazon, right? That's part of that success. You don't think Netflix doesn't have a lot of elite marketing when you open Netflix and you have a recommender system always recommending you the show that you love. Each Netflix show has dozens of thumbnails that are done by marketers that are targeted to get you hooked. it's psychology, it's stats, it's data science. Calling a marketing department, making fun of people as a marketing department is not a valid insult. It's actually a compliment. It's one of the higher up sciences in the field of business. So that's my second point. And marketing has always suffered from that. It gets a bad rap, believe me, but that's a misplaced thought on marketing. Marketing is, the difference between a company's success and a company's no success. When companies don't invest in marketing, they have no success. Marketing is important. Then point number 3. Now that we know that marketing is important, let's talk about paid versus unpaid marketing and which is best. And this is the rumors that I've seen circulating on X. People are cheering for the blood. They love the blood. They're like, yeah, it's so bad. Show us. Are you getting paid? Are you getting paid? You pseudo so-called marketing department who was at the Strategy World Conference. Are you getting paid? Who's paying you to promote? And I think we need to remove this really 19th century bias of the transaction. This is industrial revolution type thinking. We're entering a new era, folks. Like, this is not like you don't need to get paid. You don't need to get paid. Early iPhones adopters would not shut up about their iPhones. That's all they would talk about. Today, people can't stop talking about AI. People can't stop saying, oh, I don't do anything without my AI. I use AI all the time. Oh, AI is part of my workflow. Even releasing AI at, I guess Mother Day's parties today and talking to the AI in the heart of the room. Installing AIs on... Anyways, like this seldom known. Overweight folks, right? Think about GLP-1. Do you really think GLP-1 is a billboard-driven revolution? No, GLP-1 is all about social media. When a product works, you don't need to pay for your marketing. When an equity works, you don't need to pay for your marketing. MSTR stock, MSTR common shares is the product. And when MSTR common shares has made you more money than your entire career at your day job, why wouldn't you promote it for free? Why wouldn't you tell about MSTR to your friends, to your family, to everybody? Why wouldn't you do that? And when MSTR stock has made you more money than your entire career at your day job, why in the world would you want to be paid? Why in the world would you want to have the form of transaction which is the most taxed? Like, being earned income is the worst way to earn income. Like, it's even worse than, say, stock income or dividend income. Earned income is the worst. It is the worst. In Europe, it's even worse, right? But in the US, right, earned income, FICA, look at your salary. Look at how much you're paying in FICA in the US, right? And of course, my European friends are going to laugh because it's 7.5%. And I know that in Europe, sometimes it's close to 50%. Do you really want to get paid for your labor? Absolutely not. This is not how the 21st century works. You're much better off keeping your capital and promoting your capital. And AI, by the way, is already well on its way to replacing most employees at elite organizations. And it begins with elite organizations. If you watch Strategy World, you know that. You know that. Like, many of the ideas that Saylor has had for the company were generated by AI. He said 95% AI, 5% internal folks. I think employment, I think paid labor is going to be a very, very small, a very rare thing in the future. That's what I think, especially as agentic AI is coming. And so do you really want to have a paid marketing department? Listen to Saylor when Saylor talks about how he turned his Twitter feed into a machine for MicroStrategy's aura, right? It's about retweeting pictures you didn't make. Today, this morning, one of his videos is going viral of him as a baby, having a conversation with a reporter as a baby, from toddler in Bitcoin, a account with, I think, 700 or 800 followers on X, right? For free. He just retweeted it for free. That person probably created millions of dollars of ATM demand, maybe more, for free. So unpaid marketing is the much better marketing. I don't want to see paid marketing. That would be a bad thing. That would be a bad thing. And if you have any doubts about that, go back to your theory. Go back to thinking mode on Grok, right? Or on ChatGPT, and consider this. If an employee is also a shareholder, wouldn't it be in the best interest of that employee to award themselves no salary? Think about that a second. Pause the video and think about that a second. If as an employee you are the owner of a corporation, you would have the biggest incentive in the world to pay you no salary. You would. You entirely would. Except it's illegal because we have minimum wage laws. Warren Buffett got this. That's why Warren Buffett never made more than a 100,000, a nice round even number. Warren Buffett never made more than this. He got this because it is the least efficient way to transfer funds, money from the company to you. It's the least efficient thing you can do. This is the least efficient thing you can do. The more efficient thing and rational thing you can do is promote it. Promote your asset. Promote your idea. If you want to see more of a product, promote that product. If you want to see more of a YouTuber's video, like the videos, which I never ask halfway through my videos. I probably should. That's how it works today. So to me, this has no leg to stand on. This absolutely has no leg to stand on to me. So anyway, that's point number 3. Point number 4, and this is the heart of the argument. And so this is where we're going to go back. So as we know, Saylor is a student of science and engineering. I've driven that point home a lot. But Occam's razor is the simplest solution is the best solution. He said that multiple times on podcast. As long as the ATM works, do the ATM. There is nothing more simple than the ATM. You don't need to educate anybody on demand for equity, right? MSTRs in the Nasdaq. The Nasdaq, people buy the Nasdaq daily. Retirement funds, every month or every 2 weeks, you have billions of money targeted towards retirement funds. Saylor gets a share of that money. The MSTR equity product, the MSTR common stock, gets a share of that money. It's embedded within financial system. MSTR equity is the simplest, most easily understood stock. And that's why he's focusing on that right now, because it's the simplest solution right now. It's the most understood thing right now. But Saylor is building for the future. He's a long-term thinker, right? He has a 2045 price target. And so in the future, it's possible that ATM will be less accretive. In fact, I think after 2030, we probably will see lower ATMs, maybe a 1.5, right? Maybe less than that. And so at that point, you want to have other instruments. And so when you launch new products, you got to launch them early, right? And as my viewers understand, MSTR equity is the top product of MicroStrategy. MSTR convertible, to me, is probably the most luxurious, the highest end product of MicroStrategy. And I think we're not going to see a lot of MSTR convertibles. I think MSTR convertibles are extremely special, perhaps as special as the equity. But the Strike and the Strive products, I think they're going to be the real mass markets of the product. Like this is going to be, to talk Tesla. This is going to be the Model 3 and the Model Y of Tesla. This is going to be the mass market product in my view. Especially Strike. Strike is very compelling, 8% yield, and you can convert into MSTR shares after MSTR reaches $1,000 shares. This is a very compelling product for income investors. No offense to MSTY, but I find this much more compelling than MSTY because this is a real yield that is not contingent on volatility staying up, right? Anyways, I think all MSTR holders, at some point, they will, first of all, of course, it's the equity, but you could own the equity, you could own the converts, you could own the Strike, and what are MSTR holders? They're customer owners. You're both customer and owner of a company, right? And so, of course, customers and owners understand, and this is the way this is understood too, is these 4 products, they make their way to the balance sheet via the cash flow statement, not via the income statement. And making your way to the balance sheet via the income statement is the most efficient way to do it. The product is the equity, the converts, the strike, the strife preferred. These are the products. And because we live in a world with 20th century views and laws, because of that, they are not taxed, right? The money flows in unscathed into the balance sheet, right? Whenever there's strike or stripe or MSTR convertible, the money flows it into MSTR unscathed into the balance sheet. And this is the product that they're selling. They're selling investment products. That's why we say it's a Bitcoin development company, right? It's very close to a private banker's business. So anyways, moving on. The MSTR equity. So let's talk about the main product. So the MSTR equity, like I said, is very high demand. Is in very high demand. It took 4 years for us to get here, okay, and 4 years of FUD fighting. And now we are starting out the same journey with the converts and the strike. But I have very specific views on this. So the MSTR converts, right now they're only understood by volatility arbitrage traders, hedge funds, right? My take, and this is a take that I've been developing more and more, and Saylor has helped me develop that take in every one of his speech. If you watch that video that I made about the ETFs powered by MSTR, you may have heard me say that I find BMAX to be the best. BMAX, in my view, is the best. Why is BMAX the best? Because BMAX gives you exposure to 77%. 77% of BMAX is MSTR converts. And I look at the MSTR converts as almost too good because they give you 70% of the upside with downside protection. The value of the convert is the downside protection, but you still have most of the upside of MSTR that is still available. I find these too good. They are too good. I'm actually glad that he's not issuing these anymore. These are too good. They're kind of like the Ferrari or the Hermes product of MSTR, if you think about it this way. They're the product that to get your hands on that product, you gotta be special. And BMAX is a really good asset because it allows you to get access to that product through a pool of converts without being special. But frankly, these are a little too good to be true. And the reason why they're too good to be true is that if you're more sophisticated investors, you know that BMAX, being debt, it serves as the most pristine collateral you can have in a retirement account, in a brokerage account, in a pledged asset line, right? BMAX everywhere. Look at your broker. Everywhere BMAX has a 25% maintenance ratio. You know, MSTR equity has a 75% maintenance ratio. You can borrow next to nothing on MSTR equity on margin. On BMAX, you can borrow against BMAX on margin just like you could borrow against the S&P 500. That's the real trick. And that's why I find BMAX to be too good to be true. It is too good of an asset. I'm glad he's not pushing it. I think Saylor is realizing that BMAX is probably too good, and so I think the next time you offer the converts, they're not going to be offered with as good of terms. The terms are not going to be as good, and that's why BMAX, you get the old converts, which were offered, frankly, at too good of a term. That's the way I think of BMAX. And I consider strike and strife to be just right. They are just right. They're boring enough to not interest the equity buyer. But they are easy enough to be explained to the fixed income investor, and they pay yields high enough to please the income investor. And strife is for the skeptic. You get no exposure to Bitcoin whatsoever. And strike is for someone who's a slight Bitcoin enthusiast but likes to make income today, or someone who says is a retiree and still does not subscribe to the buy, borrow, die strategy, right? Which I understand that the buy, borrow, die strategy is really something that is more understood by perhaps the billionaire crowd, perhaps the centimillionaire crowd, perhaps the real estate investors, for example, understand buy, borrow, die. That's like one of the only things in my view that real estate investors get right is that they understand buy, borrow, die, right? A lot of equity investors don't get buy, borrow, die. So of course some people say, oh well, wait a minute, I want to have income, I want to have money come in my personal balance sheet. I want that money to flow to my personal balance sheet via the highly taxed income line. I don't want to have money flow to my personal balance sheet via the zero tax deadline. And the zero tax deadline, of course, would be borrowing against your MSTR equity, borrowing small amounts each time, right? No more than you would a dividend, but borrowing against your BMax equity. And then next thing you know, at the time of your death, you have a balance sheet that is, say, 10% debt, 90% equity, and, hopefully you get a trust and you do something like that. Anyways, this is not the topic of this video, but you get the point. I think my viewers get that point. You see, income investors are always going to be a thing. That's the way it is, and I think these play a good role for that. And when people say, "Oh, there's no demand for Strike or Strife," well, Strife we don't know, right? Because Strife there was only one offering, and there is no ATM on Strife, so we don't know about Strife. So we can only discuss that argument on Strike. And do they need marketing? I think I've made the point that marketing is a good thing. So we always want marketing, but do we have enough data to say there is not enough demand on Strike? And this is going to be the final slide of this video. Actually, we don't have enough data to say that, because let's go to the 8Ks. Let's do actual research. 1 week ago, 8K. 2 weeks ago, 8K. 3 weeks ago, 8K. And 4 weeks ago, there was no Strike ATM. So 3 weeks ago, the Strike ATM brought in $8 million. 2 weeks ago, the Strike ATM brought it $37 million. 1 week ago, the Strike ATM brought in $51 million. Tomorrow, what are we going to have? Are we going to have $70 million? Looks to me like a very smooth ramp. Looks to me like it's the same smoothness of the ramp for the Strike ATM as it was for the common ATM in the very early days. It is a smooth offering process. We don't have any data to say that there is no demand for Strike. We can't expect Strike to have $1 billion worth of demand like the common. The common has 4 years of understanding. Strike is just starting out. If I look at the trend, and if I were to look at the money coming in, just like I would judge a company's revenue growth, I'm very satisfied with that trend. This is a multi-100% growth rate per year right now, if not more than 1,000% growth rate in that trend. I'm loving that trend. So anyways, we'll see tomorrow, but I don't think there's a problem with demand at all. We don't have any data. Like if it's trending down for, say, 2 weeks, then maybe. But it's not flat. It's up. It's on an uptrend, the Strike ATM. So the converts we're not offering. We're not offering the converts because I think it's a bad deal for MicroStrategy. Strife, we're not offering because the 21 billion ATM on Strife was not launched just yet. We're offering on Strike. That's the only debt instrument we're offering regularly. And the growth rate on Strike is astounding. It's very, very highly satisfactory. So I love it. And one more thing, and I'll conclude with this. There is one thing that the FUD's attack did well this week. It's harness human psychology and fear to get views. 400K views, was it? Probably more, probably 500K. Maybe even 1 million. Give it 2 more days. These posts are going to get 1 million views, right? And so my question, this is more of an open-ended question for the community of MSTR, because I think a few of you watch my videos. Should the MSTR do the same things, right? Should we start digging through the books of a random bank and write a fear-inducing article like a random person does this on MSTR? Like, is this something we should do? Or on the contrary, should we just take the high road and just keep the positive ethos and talk about cooperation, Because in fact, Saylor welcomes the bank, welcomes the hedge funds, welcomes everybody. He literally welcomes everybody. Even the enemy of Bitcoin and MSTR is welcome to short MSTR. He even said, I'd rather people short my stock than Bitcoin. So anyways, the point I'm trying to make here is that we have to work 10 times as hard. Positive headlines you have to work 10 times as hard to get as many views for a positive headline than for a FUD, fear-inducing blood in the street headline. I personally think we should stay that way. That's the way I think. For example, on the channel, sometimes I joke. My favorite company to pick on, for example, is AT&T and their debt load. Love to pick on AT&T. But I'm always kind, to be honest. I never wish I never wish them ill. I would never short. I would never short a stock because I think they have issues with their capital structure. I would never do that. I don't think that is the way, right? It's like, so anyways, that's just one more thing. So hopefully, the more hardcore lovers of MicroStrategy will watch this video to the end. If you did, please like, please share, please subscribe. This was not investment advice, not financial advice. This is just entertainment. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.